What are the examples of matters that the auditor may consider in determining whether a deficiency or combination of deficiency in internal control will constitute a significant deficiency? In the internal control, see, you have SA 265, which deals with communicating significant deficiency in internal control to the management and those charged with governance. Deficiency in internal control means where the internal control is unable to prevent, detect, correct the misstatement, or the control for preventing, detecting, correcting the misstatement is missing. Completely it's missing. So when I say, when we talk about the deficiency in the internal control, what are the aspects you have to consider actually here? What things you have to look into it actually? First of all, you have to see the likelihood of deficiency which is leading to any material misstatements in the financial statement. So what is the likelihood of deficiency which may lead to material misstatement in the financial statement in the future? Then susceptibility to loss related to assets or liability, or susceptibility to fraud related to assets or liability, subjectivity and complexity in determining the estimated amounts, like say fair value accounting estimates. So any subjectivity and complexity of determining the estimated amounts, like fair value accounting estimates. Financial statement amount exposed to deficiencies, volume of activity that has occurred, that could occur in account balance, class of transaction which is exposed to the deficiency. That's the thing. So there may be some volume of activity which may occur in relation to account balance or class of transaction which is exposed to any kind of deficiency. And the importance of control which is related to financial reporting. For example, there may be a general monitoring control where oversight by the management. For example, management will request for reconciliations. That is oversight by the management. Like having an internal audit, that is an oversight by the management. Control over the prevention and detection of fraud, controls over selection and application of the accounting policies, control over significant transaction with the related parties. Related party transactions, high susceptibility of fraud is there. Control over significant transactions which are outside the normal course of business. Control over the period and financial reporting process. Say, for example, what is the control you are having on the non-recurring journal entries? Okay, that's the thing here. And what is the frequency of by which the exceptions are being detected as a result of deficiency in the control? What is the cause of the exception, and what is the frequency of the exceptions, basically, which is not where the controls are not able to detect the same. Okay, so these are the examples of the matters which the auditor may consider in determining whether the deficiency or the combination of deficiency in a control may lead to significant deficiency. Okay, the likelihood of deficiency leading to material misstatement, susceptibility to loss, to fraud, susceptibility to what you can say to the subjectivity and complexity of determining estimated amounts, like fair value accounting estimates, financial statement amounts which are which are completely exposed to deficiencies, volume of activities that has occurred actually here in the account balance, class of transaction which are exposed to deficiencies, and different controls, general monitoring controls, control over prevention and detection of fraud, control over related party, control over what you can say transaction which is outside the normal course of business. Okay, all these factors again I'm repeating so that it can be reassessed in your mind. I'll see you in the next video.